Do you have some cash that is just sitting in your bank account, earning little to no interest while inflation quietly erodes its value? Many people find themselves sitting on what we like to call lazy money. In this video, we will explore how to leverage this lazy money for financial gains, transforming it into a powerful tool for wealth building. You'll learn practical strategies to optimize your idle funds, turning them into active assets that work for you. We'll discuss various investment options and how each can help you maximize your financial potential. By the end of this video, you'll have a clear understanding of how to make your money work harder, rather than letting it sit stagnant. What's even more important is we will help you understand the importance of unconventional investment strategies that can set you apart from the average investor. In a world where traditional methods often fall short, thinking outside the box can lead to significant financial rewards. Whether you're a seasoned investor or just starting out, embracing these innovative approaches can help you unlock new opportunities and achieve your financial goals. So, what do we mean by lazy money? Lazy money refers to funds that remain idle, typically sitting in low-interest savings accounts failing to generate any significant returns. When funds are just sitting untouched like this, you not only miss out on opportunities for growth, but also lose value over time due to inflation. Common sources of lazy money include traditional savings accounts, checking accounts, and cash reserves that individuals keep for emergencies. While having some liquidity is essential for financial security, excessive idle funds can hinder your wealth-building potential. For instance, savings accounts at your local banks often offer interest rates that are lower than the inflation rate. This means that your purchasing power is diminishing over time. The opportunity cost of not utilizing these funds effectively is significant. Every dollar that sits idle is a dollar that could have been invested in assets that have the potential to appreciate in value. By failing to take action, you miss out on compounding returns and the chance to grow your wealth. Understanding lazy money is the first step toward making informed financial decisions. By recognizing the importance of actively managing your funds, you can turn lazy money into a dynamic part of your financial strategy. So, how do you put your money to work for you? We, here at Impressive Investing Ideas channel, advise you to explore as many opportunities as possible. Our channel is dedicated to keeping you educated about all the different financial opportunities, regardless of your current financial restraints. If you don't have thousands of dollars to invest, we recommend you watch our video about turning $100 into $10,000 in one short year. It is possible, and we have seen this many times. So, here is what you do to start putting your lazy money to work. First and foremost, it is crucial to identifying all the possible opportunities. This means you need to do a lot of research. Read, listen to financial podcasts, and if your budget allows, consider taking an online class or two. Also, join online communities where you will most likely meet like-minded individuals who are also on their journey to financial freedom. After your initial research phase, your second step is exploring unconventional opportunities that can yield impressive results. One such option is peer-to-peer lending, where you can lend money directly to individuals or small businesses through online platforms. This not only allows you to earn interest rates that often surpass traditional savings accounts, but also helps support borrowers in need. However, as you consider some of these investment avenues, it's essential to conduct a thorough risk assessment. So please do your due diligence before making any investments. Each investment option comes with its own set of risks and rewards. For instance, while peer-to-peer lending can provide higher returns, it also carries the risk of borrower default. So, remember to start with small funds and increase over time after you've gained more knowledge and experience. Another attractive choice is high-yield savings accounts, which offer significantly better interest rates than standard savings accounts. This will allow your money to grow while still maintaining liquidity. Even though high-yield savings accounts are generally safer than peer-to-peer lending, it may also not keep up pace with inflation over the long term. Understanding your risk tolerance and financial goals will help you make informed decisions about where to allocate your idle funds. We encourage you to think creatively about your investment strategies. Third step in our process is implementing effective strategies, which will truly maximize returns on your lazy money. One of the most important strategies is diversifying your investments. By spreading your funds across various asset classes, such as stocks, bonds, real estate, and other alternative investments, You can reduce risk while enhancing potential returns. Diversification helps protect your portfolio from market volatility. It ensures that a downturn in one area doesn't significantly impact your overall financial health. Another valuable strategy is to consider automated investing platforms. These tools use algorithms to create and manage a diversified portfolio tailored to your risk tolerance and financial goals. They often come with lower fees than traditional financial advisors. This makes them an accessible option for those looking to invest their idle funds without the hassle of constant monitoring from financial advisors. With automated investing, you can set your preferences and let the platform do the heavy lifting, allowing your money to grow with minimal effort. Also, some financial advisors charge hefty amounts for their advice. We, here at the Impressive Investing channel, advise you to skip the traditional advisor step and do your own research for now. After your research and experience, you will know better questions to ask financial advisors. That's when you should seek out a reputable advisor. Do not sign up with any advisors or investments firm before you have chance to do your due diligence. Lastly, it's crucial to regularly review and adjust your investment strategies. Financial markets are dynamic, and what works today may not be effective tomorrow. By periodically assessing your portfolio's performance and making necessary adjustments, you can stay aligned with your financial goals and adapt to changing market conditions. This proactive approach ensures that your lazy money is consistently working hard for you, maximizing returns and paving the way for a more secure financial future. If you have no or little experience with the financial world and investing, we think some real-life stories might help you understand certain concepts better. One such example is Daisy, a young professional in her mid-30s who realized her savings account was earning minimal interest. When we say minimal, we mean minimal. It was 0.2%. So Daisy followed our advice and took some action. First of all, she did her own research and explored a variety of investment opportunities. After thorough research, Daisy decided to invest in a diversified portfolio of index funds and ETFs. She made her goal to consistently contribute a portion of her paycheck. She saw her investment grow significantly over just a few years. While keeping her full-time job, Daisy also ventured into peer-to-peer lending. Initially hesitant, she researched various platforms and assessed the risks involved. By carefully selecting borrowers with strong credit ratings and diversifying her loans across multiple projects, Daisy was able to achieve impressive returns that far exceeded traditional savings rates. This success not only provided her with additional income, but also inspired her to explore other investment opportunities, such as real estate crowdfunding. We will talk more about Daisy's investing adventures in crowdfunding in our next videos. I hope Daisy's story inspired you to take action and start doing your own research. What most people don't realize is that financial success comes from every day's small wins. Financial success doesn't come from one big win. One big win comes from daily small actions. So taking small steps every day is very important. Start with reading one finance book, then read another one. We recommend you read 10 pages of a finance or investment-related book every day. Then, plan to go meeting with financial advisors or consultants. Keep asking them questions and learning from them. While doing that, build a close community of like-minded people who are also on their journey to learn and achieve financial independence. The initial process will take you at least 6 months. After learning different investment options and strategies for at least 6 months, only then, consider to start investing with small amount initially. Learning is important, but taking action is crucial when it comes to optimizing your financial growth. The sooner you start making informed decisions about your lazy money, the more opportunities you'll have to build wealth over time. Whether you choose to invest in stocks, explore peer-to-peer lending, or open a high-yield savings account, remember that every small step counts toward achieving your financial goals. We hope you found this information valuable and inspiring. If you're eager to learn more about personal finance and investment strategies, we encourage you to subscribe to our channel. Thank you, and see you soon.